Welcome back to Teshkid FX for another Fantom price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Fantom chart, which at the time of this recording has lost the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also lost our key area of support at around the $0.5 mark. We have also continued to see a bit of a breakdown to the lower side, and in this video I want to give you the worst case scenarios that could possibly play out here on the Fantom chart if this breakdown continues. And before I get further into the technical analysis, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership, and allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making our lower low down there, we started this massive bounce to the upside, obeying the Elliot wave structures, where I have this Elliot wave structure in red, having that as the first wave. Then we saw that wave 2, then a wave 3 giving us a peak at around the $0.3575 mark. Then we saw the formation of that wave 4 before we started this massive bounce to the upside in the formation of this wave 5, giving us a peak at around the $0.657 mark. And after seeing this 5-wave structure to the upside here in red, we completed an even larger Elliot wave count 1 to the upside of this Elliot wave structure right here in yellow. And after seeing the formation of a larger Elliot wave count 1, whatever we expect next is a corrective structure in the formation of a larger Elliot wave count 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.382 and the fib level 0.5, which is a target area that we fully maximized in the formation of that wave 3. And I now believe that whatever we are seeing at the moment is the start of that massive bounce to the upside in the formation of that wave 3, and that can only happen in case we continue holding above key areas on the Fibonacci's and we do not invalidate the Elliot wave structures that I'm having here on the charts, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.213 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. And in the formation of that wave 3, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 3, where I'm expecting the wave 5, which is a fractal wave within the formation of these larger Elliot wave count 3, to fully maximize our target areas in the formation of that wave 3. And I believe we are seeing such a scenario over here. And if I zoom in so that we can see that better, you can see that after making our low in the formation of that wave 2, we saw that bounce to the upside, giving us a peak at around the $0.6 mark. And after seeing the high for that first wave, we started this corrective structure in a move that is now giving me the low for this second wave. And this is what is going to give me the worst case scenarios in case we invalidate and also lose key areas on the Fibonacci's over here. And using the Fibonacci's to get to sketch out a minimum retracement area in the formation of this wave 2 by connecting the fibs from the low of the first wave to the high of that wave 1, that gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which is a target area that we fully maximized. And after losing the fib level 0.618, I had to extend my target area back to the fib level 0.78, which is still a minimum retracement area in the formation of this wave 2. But upon losing this key area on the Fibonacci, then that could put a major challenge on this Elliot wave structure that we have right here. And in case we lose the fib level 0.78 and maybe get to the fib level 0.88, which lies at around the $0.4353 mark, then that will be putting an invalidation point on this Elliot wave structure that I have right here. And in case such a move plays out and we continue seeing a breakdown to the lower side of this target area and also lose the fib level 0.88, which is at around the $0.4353 mark, then that could mean that whatever we are seeing over here is just an ABC corrective structure, where we can term this whole structure as a wave A. Then this is the wave B, giving us a peak at around the 0.6, and I'm expecting one more new low in the formation of that wave C to give us the low for that larger Elliott wave count 2 to the lower side. So there are chances that we might not have seen the low for this higher Elliott wave count 2 at the low that we made at around the $0.41 mark, and this can only happen in case we continue seeing the breakdown that we are seeing here on the Fantom chart and continue losing other key areas of supports and give us one more leg down in the formation of this wave C in what we could term as the low for that higher Elliott wave count 2. And in case such a move plays out, we can term the new low as the low for that higher Elliott wave count 2. Then we can expect our bounce to the upside in the formation of these higher Elliott wave count 3, and also expect our 5 wave structure in formation within the formation of that higher Elliott wave count 3. So that is what I'm expecting here on the worst case scenario, because it seems like the breakdown is not cooling off any soon, and we need to be prepared for that and also continue using our stop losses, because I know some of us might have opened some long trades here on Fantom. So that is what I wanted to prepare you for here on the Fantom chart. And in case this breakdown continues, we can also sketch out a minimum retracement area in the formation of this wave C to give us that one more leg down, using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, and that wave C could be giving us one more new low between the fib level 0.5 and the fib level 0.618, which is the area between the $0.487 mark and the $0.3517 mark. So we need to be prepared for such a scenario over here. And also taking a look at the indicators, here on the RSI we are trading at around the 29 mark, meaning we are just about to get into the oversold region, but that doesn't mean that the RSI cannot support further movements to the lower side. Also taking a look at the MACD, we have been able to print a bearish cross, and we're also seeing a massive increase in the selling momentum here on the MACD. Also taking a look at the volume indicator, on the volume indicator we are seeing a bit of an increase in the selling momentum, so let's be prepared for maybe one more leg down in the formation of that higher Elliott wave count 2 before we can start our massive bounce to the upside in the formation of that higher Elliott wave count 3. So that is what I'm expecting here on the short-term scenarios on the Fantom chart, and let's be patient and see how that plays out, and I'll be keeping you updated.